Welcome to Looking at the Markets with David Modell. I want to help you to find high short interest stocks, and I'm going to show you 3 websites today. This is not a sponsored or promotional video. I'm not being paid by these websites to make this video. Just 3 websites I found to help you, and they're free right now as far as I can tell. So that's pretty cool. And use them at your own discretion, though. All right, I cannot guarantee that any of the information presented is accurate here. Let me explain what this all means, first of all. When there is a high percentage of short interest, sometimes it's called short float, that is the portion of the outstanding shares of a stock, the stock shares that are out there available for trading. What percentage of those outstanding shares of a stock are being borrowed and held in a short position? Meaning somebody's betting that it's going to go down, right? So you have to borrow shares to short a stock, and you're going to have to buy them back, and that's covering your short position. And when a large percentage of the outstanding shares of a stock are held or borrowed in a short position, then it's possible that if the stock price goes up a lot, then there will be panic short position covering, right? The people who held their shares short in a short position, a lot of them are going to have to cover because they're losing more and more money. They're going to have to buy back those shares that they borrowed. And so the stock price can go up really fast after that. You've seen that probably with GameStop, AMC, that kind of thing. So let me show you what this looks like right now. This is highshortinterest.com. And I'll put a link in the description below this video to these 3 websites if you just want to click on them easily. Again, I don't get paid for any of that. But this is pretty cool. I think it's not bad for a website that I was able to access for free right here. And hopefully you can access it as well. And it goes in order. All right, Workhorse at the top, Arcimoto, Blink, and some well-known short names like support.com, okay? Ride, Lordstown Motors, Ocugen, Nikola. So you have to ask yourself, why is there such heavy short interest percentage-wise? When it gets above 20%, then you're getting into high short interest territory, I would say. When it gets above 30, that's extreme. And so if that stock goes up, then there could be a lot of covering of short positions, which could really send the share price higher. No guarantees, of course. And again, you want to research the company and ask yourself, why is the short interest so high? Is the company really in trouble? Is there a reason that so many people and or institutional investors believe that the stock is going to go down? Yeah, some famous names here. Bed Bath & Beyond. Solo. Interesting. I've talked about that one before. Beyond Meat. Huh. So there you go. All right. And just be really careful. All right. So learn about the company. Look at the chart. Look at the fundamentals. All that stuff. I don't want you to buy a stock just because it's on the top of this list. That's not what it's all about. It's more about, hey, you were thinking about investing maybe in, Blink or something, or Workhorse or whatever, and you notice that since you're going to buy it anyway, also there's a heavy short interest, and that could be like a rubber band, which gets stretched, and then what if it snaps back? Could snap really hard, all right? So there's one. Another one is from MarketWatch, marketwatch.com/tools, screener, short -interest. I'll put this in the description below the video so you have it. And they go in order as well, but notice it's different ones on the same day. And some of these you might not have heard of, but there's some familiar names. Again, Workhorse is near the top of the list. Blink again, Arcimoto again, and so on and so forth. Nikola, you get the idea. So it took me a minute to figure out, I'm like, why don't they have the percentage of short interest or short float? So what I did was I went down to the bottom, and I noticed there's a horizontal scroll bar here. So you scroll it to the right, depending on your browser or whatever. And then I went back up, and there it is. Percentage of float shorted. 52.67% on CURV. Wow, that's pretty intense. Again, anything above 20 is kind of intense. Above 30, that's extreme. So when it's 50 or 40, I would look up the company, make sure there's, you don't want to buy a stock of a company that is really in horrendous trouble. I don't recommend that. All right. And then one more, Finance Hill or Financial, right? And this one, I do like this one. Again, it's in order. Some famous names here: AMC, American Airlines. There were a couple here that I kind of like anyway. TDoc, Teladoc Health. That's kind of an interesting one. And the percentage of short float, if I look at that column under TDoc, 11.64%. Not extreme, but I'm okay with that. If I like the company and the stock anyway, maybe that's just a nice like icing on the cake to make me want to really consider it even more. There was also Zillow down here, which I kind of like anyway. Almost 13% percentage of shares or of the float held in short positions there. Kind of interesting. Cleveland Cliffs is on there. So, yeah. These aren't all companies that are in horrendous trouble, I don't believe, necessarily. All right. Also, in case you don't know already, there's a thing called days to cover. And that is theoretically, how long would it take everybody holding the shares in short positions? How long would it take all of them, theoretically, to cover their short positions? So when it gets above 10, that's kind of extreme, I would say. So like American Airlines, it would only take 2 or 3 days for everybody to cover their short positions, right? And so that kind of tells me that maybe the short interest is not that intense. The percentage of short float is 14.5%, but if everybody can cover their positions that quickly, whereas take something like Wayfair, okay, 13 days in theory it would take for all the shorts to cover their positions. And so that would be a long unwinding. Imagine the share price possibly going up and up and up for, let's say, 13 days maybe, while more and more people cover their positions. Because imagine people running for the exits, but what if there's only one exit door, and it's taking people a long time to get out, right? That could prolong the situation, which would be good if you own a stock and the shorts are frantically covering, right? So it's an interesting idea. So I wanted to teach you about that concept as well. So again, links in the description below this video. Check them out. Use them cautiously, please. Again, don't buy something because it was talked about in a video, and don't buy, that's not the only reason. That's just for ideas for you to research on your own, okay? And don't buy something just because it's on a list here. All right, so I hope this was helpful to you. Thank you for watching and listening. I will talk to you again soon.